Hello and welcome to another Major Market Movements End of the Week Market Review for June 5th, 2015. I'm Quadji, and in this video we're covering the FX markets, energy markets, the equity markets, and the bond market. And we're going to start off here with not the Dow, but actually the Euro. All right. This is a daily, closed down negative, but while we're above this level here for key support at about 101 or 1.1006, somewhere in there. While we're above that level, I think we still have a chance for some higher highs. We dip below that, and that's going to be our first indication that this move up is only 3 waves. It's a corrective series. This could be just an X wave, and it would invite more selling. So very key level of support right there. We'll see what the market gives us next week. I think partially this is due to the unemployment numbers coming out looking positive, and thus giving the impression that the U.S. dollar was gaining strength because the employment picture was looking rosy. I don't want to go into all that fundamental business, but the Bureau of Labor statistic numbers are constantly being toyed with. There is no real standard that they're using. They stopped using real standards for a long time now, actually. So it's hard to look at those numbers with any bit of seriousness, and we'll see if next week the market completely ignores it or not. The generally the heavy or big news of what am I trying to say? The big news announcements, like the employment numbers, like the FOMC announcements, those kinds of things, they can. I've noticed that they can oftentimes, cause the market to turn or to move significantly, maybe for 1 to 3 days, and then the excitement of that event wears off, and the market gets back to its original trajectory, its original groove. And so I would take today's movement with a grain of salt, and I think it best just give it some more time and see what the market really thinks. And I'll probably be after this weekend, going into Monday, that the real market will show up. So the QG3 is in a neutral pattern here, with the 3 EMA above the 20 and the 10 EMA, the green line, below the 20. So kind of a mixed picture there. The euro on the weekly, get an inside key reversal, some fall through off of last week's hammer. So it's looking bullish. The EWO, again, just more sideways chop here, right around the 0 line, so not much to see there. The euro does get a nice bounce off the 40, so that's good. That's a good sign. We've come up here to test the 60, and we see this rejection. So we're kind of caught in the middle still between the 40 and 60 level. If this trend is truly bullish, we need to see that price come up, crack the 60, and head up to 70 plus. And obviously a dip down coming back to below sub 40 is going to be bearish. The MACD on the daily is closed out and is neutral. And on the weekly, we're still open to the upside. So euro overall, I think early next week will be really telling as to what kind of market we're truly dealing with. Could we just be in a period of more consolidate, more consolidation, more sideways chop, certainly can be. But so far, we've got a nice little uptrend going, and I certainly don't want to give up on that just yet until we get further evidence that it's just not going to hold. All right, let's move to the Great British Pound. All right, so the pound drops off. We had a somewhat of a small inverted hammer candle yesterday, and seen some follow through today. The coming back down here to basically test this last swing low. The QG3 is bearish, has a bearish alignment to the downside. The weekly week closes below last week's intra-week low, so that's bearish. And EWO, again, not much to show you there. More sideways action. And the RSI, you can see we're still right above that 40 level. We'll see whether or not next week we'll get a bounce off of it. And the MACD on the daily is open to the downside, and on the weekly open to the upside. So I think the pound is still kind of in a choppy sideways move here with a slight bias to the downside. This level right here is gonna be of key importance. Let's see if we can get it here. Oh shoot, I hate that. All right, 51.62 is going to be key support. We break below that, and we got something else going on here. This isn't going, even though we had a nice reversal candle back here previously, this would be a breakdown of that level, meaning all this weight that was put on above 51.62 could be brought to force the market down lower by just about as much. And you can see there's a few hundred ticks there. So a break below that, and probably going to come all the way down here to 4,900 or so for starters. That's what I'm thinking. Let's look at the dollar. All right, so the dollar. Let's move to the daily. All right, so the dollar yesterday had the hammer candle, getting some follow through today, and that's all well and good. But if you look at the shorter time scale here, it does. So far, we only have 3 waves up. So next week is going to be really crucial. If we come back down here and break, basically reverse all of today's move and comes back down and takes this low out, that's going to confirm that we only had 3 waves up, and we'll continue our downtrend. However, another pop up, it comes up here to maybe 97.25 to 97.75, somewhere in there. That would be a 5th wave. That would be 5 waves up. That would start looking like a potential. We got a potential reversal down here, and it would force us to reevaluate our Elliott wave count for sure. The QG3 is in a neutral alignment there with the 3 EMA, the red line between the 10 EMA green and the 20 DMA blue. On the weekly, we get trying to produce a hammer candle there, though not terribly convincing. All right, EWO, really not much to show you there. We do have this large move to the downside in the EWO, so and it didn't really get a shot up to produce a negative divergence on the top side. So I have to hold out the potential for that to happen. And I think it could happen if we see a violation of this last top here at that high was at 97.77. We break that, and I think we could see this EWO come up a bit more. We see the price maybe eke out an incremental high, and that would produce our negative divergence on the top side in the EWO, which we currently don't have. All right, so the RSI, we dipped below the 40 there, and we hit the 30 and bounced, and that's okay. We've come up here to test the 60, and we've seen an initial rejection, so it's going to be important that the price stay below that 60 level and continue lower to take out, re-challenge the 30 level or even go lower. We break that 60 solidly, and again, our midterm trending is disrupted to the downside, and we may see another strong move higher. US dollar on the weekly MACD is still open to the downside, and on the daily, it was bullish. It's closed out some, but it's still technically open to the upside still, even though it's contracted. So US dollar, I still think this is probably just a corrective move today, and the regular market will come back in and put it back in its place. But all that is highly dependent upon keeping below this last swing high here in the roughly the mid to upper 97 level. All right, USD JPY. We did see the thrust up out of this consolidation pattern. So we're getting this pop up, and I think there's still room for maybe another incremental high up here in the 26, possibly very early next week. If true, with this triangle pattern thrust up, we would need to see a quick reversal and preferably take out this last swing low here at about 124.20. Take that out, and that would confirm that the top is in, and we're going to start our descent, our reversal to the downside. Day closes solidly higher, week closes solidly higher, though I would say just by looking at it, it doesn't look like it's in the top 10% of the weekly range. So we don't gain the higher probability of a higher high, though the Elliott wave count makes me think we could still get one more incremental high. The EWO, again, not much to see there other than the fact that we've got this higher high in the price, but still got a lower high in the EWO, creating the negative divergence between this last swing high here and this high. And that's the 2 hour. Let's go to the daily. And we're on the daily here. We are setting up a negative divergence where you can see we've got the higher high in price, but so far the RSI has not made a higher high in the oscillator. So potential negative divergence there on the daily. And MACD on the daily is still open to the upside, and on the weekly, it's closed out. Was bearish, closed out some, somewhat neutral now. So overall, I think the USD JPY does have a chance to turn around, but may not see it till next week. key level support 124.20. See that broken, and that should confirm our top is in. We're ready for a drop, a significant drop. Let's take a quick look at the Dow. All right, so the Dow comes down, drops below that trend line, closes just below it. So that trend line is in jeopardy of creating a breakdown here. We took out the key support right around the 17,900 level. And so there is a chance that we could start to see a breakdown here. Looking at it a bit closer, a bit closer, so far we only have 3 waves down. My expectation is if this is going to break down, we may see a slow, choppy move up, and then another plunge, basically build another little precipice, and then a plunge. But a quick shot back up to 18,165 next week is going to deny that probability. The first significant key level of support is obviously the 200 DMA right there, that red trend line, which is currently sitting down here at about 17,600 and rising. The weekly closes bearish, clearly negative candle to the downside. EWO still range bound, choppy sideways, and this is a really key juncture right here with the RSI. We've come down here. So the last several times we've tested that 40 level, we've seen a pop right back up. You can see that that level is heavily defended several times. So again, we basically closed the week right there at the 40 level. So early next week, if we're going to see that level defended again, my guess is that we'll see a quick pop right back up here into the lower 18s. But I would say a daily close, say below 39 into the 38 level on Monday, would be our first indication that this uptrend may be done, and we are going to start a midterm descent. The weekly is open to the downside yet again on the MACD, and the daily is open to the downside as well. So the Dow is looking particularly bearish here, though it's testing a very key level of support on that 40 level in the RSI. So we'll be keeping a watch on this, and if we don't see any significant recovery early next week, say on Monday, then I think it might be another good time to attempt a short. All right, taking a look at crude. All right, so we had this 5-wave up, and we're expecting the correction, though this correction has come down much further than expected. It did a fine job of giving some recovery in the latter part of the day. We do end the day with a bullish hammer candle, setting a key low at 59.83. So I think it best to hold on and see if we get some follow through to the upside next week. See if the day closes right at the 3 EMA. So there's still some interest in this market to the long side, seeing that. Weekly, we basically close, we still close above last week's low, which is key support with this hammer candle. Even though we didn't get any follow through, the fact that we're closing kind of in the mid-range or so compared to the last hammer candle is plenty fine. Just means that the market's gonna going to take a little bit longer to correct. And EWO, again, right around the 0 line, so not much to see there. MACD, or excuse me, not MACD. This is my RSI, which is gone. Hold on a minute. Okay, got the RSI here. We're still in this range-bound place between the 40 and 60, hovering right around that 50 level. So really not much to see there. And on the weekly MACD, we are open to the upside still. And on the daily, we're open to the downside. So mixed picture as we still in this kind of range-bound spot here between this last swing low at 56.50 and this swing high now at 61.58. My expectation is we'll see a recovery next week. Yeah, but definitely gonna have to stay above this last swing low here. Break below that, and that's gonna invite a sell-off, I think. And we come all the way back down here to 54, 52 even. All right, let's take a look at these Elliott wave charts. Going back here, take a look at the dollar. Now, here's my count. The 5 waves up as part of a sea of 2, got 5 down, and so far only 3 up. Now, there was a question posed by Pythagoras wanting to know what the alternate count might be, and the alternate count would suggest that instead of a 1-2 1-2 scenario, we've got some kind of ABC structure to the downside. We've got an initial impulse up. We've just got we're working on a some type of correction here. Even though we've got the standalone 5, we may still get at least a C leg down that might fill in more of this manic move up, and then that would be maybe a 1-2, and then maybe 3 to the upside possibly. That's one particular scenario. However, coming up here, could this end wave 2 now and with an alternate bullish count? Possibly. I don't like it as much. But a breakout here at about 97, 77, 97, 72 would, sooner than later should allow for a move up to retest this high up here at about the 100 level. On the euro, here's the preferred count. We got a 1, 2, 3, 4, 5. The other more aggressive scenario is that this is a 1, 2, 1, 2. That's certainly possible. Whatever the case may be, I would want to see the price keep above this wave 1 top at 101.005 or 06. If we break below that, then the probabilities are reduced significantly enough to cause us to reevaluate our positions, maybe move out of the long side and consider possibly entering short if that was to take place. So this move down was obviously off of today's employment numbers. We'll see if the market shrugs that off early next week and we get another pop to the upside. Here's the British pound. This is not an ideal structure. Yes, it could be an ABC. It's definitely pressing the limits here. We did get a nice little bounce up at the end of the day. So we know at least some people were interested in profit taking on their short before the weekend. Will that carry on through into next week? Really not sure. Obviously, key support is at that 51.69 level. break below that, and then we could see some further selling to the downside. But a pop back up here, say above this little swing high here at 53.50-ish or so, 53.60, would give us a better indication of the possible turnaround here in the price and maybe an advance up into wave 3. As far as the alternate pattern, a bearish pattern, I do see the possibility that maybe somehow miscounted this wave up, and we've got a wave 1, 2, 3, 4, 5. That may be true, and we're working on a larger correction to the downside, which could take out the extent of this wave 3 here. That's a possibility. And I'm growing increasingly open to that possible scenario because this subwave 2 here is taking so much time that it's seemingly becoming less and less likely. So have to come up with something else. Could this be a wave A, B, C? That's a possibility, and you got a wave 1, 2, 3, 4, 5 for that C. I see that as a potential as well. Again, though, I think we're going to have to wait and see if this market takes out this swing low here or not early next week before we can speculate further on what kind of count we've got. All right, so the yen, here's that yen count again. It's moving along pretty much as expected. The count is full pretty much. We might get one more little pop-up early next week and then a reversal. I expect the reversal to be very quick. It should take as much time or less time than this move up took to come all the way, to reverse all the way back down, come down to the mid 118s again. So, but the key level of support again is going to be that 124.20 level. Break below that, that should confirm that our wave 5 is finished and we are going to start a reversal. And it may not give us much time or space to get short once that happens. So if I do produce a signal, you're probably going to need to jump on it fairly quickly, as I expect this reversal to be fairly quick. All right, so here's the crude count again. It does look like we got this 5-wave up. It looks like a possible double zigzag to the downside is finished for wave 2, and now the expectation would be for another advance to the upside. But obviously, very, very, very key support right there at 56.51. Break below that, and we have to throw out this count, and something else is taking shape here. The bearish alternative here would suggest that you've got a this initial impulse down was a wave 1, and you've got an A here, an A, B, actually, yeah, pardon me. You got an A here, and then A, B, C down for a B, extended B, and then you got 5 waves up into C for a 335 count, flat count for a wave 2 right here, and we're starting a wave 3 to the downside. That's one potential. It's not the one I favor, but I do see that possibility, especially if we take out this 56.50 level. All right. All right. So natural gas still being ornery. It's done its job to fill in this manic jump. It's done that just fine. And now it looks like the market's trying to pressure that blue trend line, but just can't quite get above it yet. So, and we do still have this head and shoulders pattern still in play, working on this right shoulder. So I do think there is a potential for a bottom here, but we're gonna have to wait for it to work on it a bit more. And I would say if Monday, Tuesday next week we get a pop up that exceeds that 263, 264 level, that would be our first indication that that blue trend line is going to finally break to the upside. And now for an impulse up. All right, so here's our IWM Russell 2000 ETF play that we're still working on. We've got this double zigzag finished for wave 2, and if you zoom in on this, this does look like a nice impulse to the downside with 5 waves. And so far, let's go in there a little tighter. So we got 1, 2, 3, 4, 5 to the downside, and so far only 3 waves up in ABC. Possibly coming in to fill in this little bit of a manic drop as gap might it might be wanting to fill that up, and then before resuming course to the downside. So obviously key resistance is at this last swing high up here. We break above that, and it's not very likely that this is a wave 2 anymore. It has to be something else, and I'll have to figure that out if and when we get there, and the intensity of the move also. I just have to wait and see. The 10-year note is moving along pretty much as expected, except today it looks like we got a 3 waves down into B for an extended B, and then next week we might get another pop up into C of 2, finish that C wave, and then we see another plunge to the downside. All right, so I think that's gonna about cover it for this week. Oh, hold on, let me check one more thing. Okay, so I was just taking a quick peek at some of the other commodity markets such as corn and wheat, and DBA and what have you, and I do think those markets could be turning around soon. We'll have to give it some more time, so I'm not going to really go into those right now, but it might be something to think about in the near future, maybe hopping into those commodity plays as we come up on some seasonal lows. All right, so we'll talk to you later. Have a great weekend. Adios.